Okay, we have already recorded 4 videos before this video on international accounting standards. This is our fourth video in which I discussed 3 standards: international accounting standards, international accounting standard 8, international accounting standard 10, international accounting standard 11. Uh, as you can see the title, the following discussion is about IAS 8 accounting policies, change in accounting estimates and errors, IAS 10 events after reporting period, IAS 11 construction contracts. Now we have to discuss these in detail. IAS 8 accounting policies and change in accounting estimates and errors. What is meant by that standard? IAS 8 is applied in selecting and applying to accounting policies. The standards require compliance with any specific IFRS applying to a transaction, event or condition, and provide guidance on developing accounting policies for other items that result in the relevant and reliable information. As you can understand by its name, that accounting policies, how to make accounting policies and assessing the situation for financial decisions. Now I have to explain this number by number, a change in accounting estimates. It is an adjustment of the carrying amount of an asset or liability or related expenses resulting from reassessing the expected future benefit and obligation associated with that asset or liability. For example, you have incurring liability and you got a loan from a firm of 50 million. So now you have to invest this loan in some other areas. So what you can estimate, what you can expect in return from investing that loan in some firms or any other uh, place where you can predict a huge return, a huge turnover on the basis of your liability which you have invested. Okay, accounting policies. These are the specific principles, basis, conventions, rules, and practices applied by the entity in preparing and presenting financial statements. That's easy to got. And now, consistency of accounting policies. An entity shall select and apply its accounting policies consistently for similar transaction, other events and conditions unless a standard or interpretation specifically requires categorization of item for which different policies may be appropriate. What is meant by change in accounting estimates? The effect of change in accounting estimates shall be recognized prospectively by including its profit and loss. Change in estimates. When you invest money, you expect return, turnover by your investment. So what you can estimate, that is account estimation. You invest money, whether you will get profit or you will get loss, both can happen. And after this I will go toward errors, accounting errors, restating the comparative amount for the prior period presented in which error occurred. Error can be occurred and which can be corrected. If the error occurred before the earliest period, prior period presented, restating the opening balance of asset and liability and equity. If the error is occurred in the financial position, financial statements, so you can correct it and the next opening balance of the next year, opening balance of liability and assets. Now, second, IAS 10. IAS 10 events after reporting period. Reporting period contains requirement for when events after the end of the reporting period should be adjusted in the financial statement. Adjustment events. An event after reporting period that provides further evidence of condition that existed at the end of the reporting period. This is explained very much in the simple words, you can easily understand this. No adjusting events, not adjusting events. An event after the reporting period that is indicative of the condition that arose after the end of the reporting period. Going concern issues after reporting period. An entity shall not prepare financial statements on going concern basis if management determines after the end of the reporting period. IAS 11 construction contracts. This is very important standard in accounting, international accounting standards, so focus on this. It provides requirement on the location of contracts revenues and contract cost two accounting periods in which construction work is performed. It is all about the construction companies. Construction company carries their business. They provide services and products. So what are their revenues and the cost they incurred in these operations? Contract revenues and expenses are recognized by the reference to the stage of completion of contract activity where the outcome of the construction contracts can be reliable. Related interpretation. FREC 15 agreements of the construction of real estate is also discussed with detail in FREC 15, which is our later and subsequent discussion. Objective is 11. It prescribes the accounting treatment of revenues and costs associated with construction contracts. What is construction contracts? Construction contract is the contract specifically negotiated for the construction of assets or the group of interrelated assets.